Hunter Thompson, welcome to the Capital Raisers Show. I'm super pumped up to have you. I'm reading your book. It's called Raising Capital for Real Estate. We're part of a mastermind. We're just through the first 4 chapters right now. Very exciting times. You've been in the business for quite a while. I think after college, you started investing in real estate right during the crash. So we'll go into that. Welcome to the show. How are you doing today, Hunter?
Thanks again for having me on. I tell you what, the name of this podcast could not be better. I'm super excited about this topic. I feel like there's a once in a lifetime opportunity in terms of the capital raising side of the business. So happy to add as much value as possible.
Awesome. Yeah. I started the show because I didn't see a lot of places. You can learn about raising capital from conferences and people and gurus, but there's nowhere to get a lot of free information where you can get consistently information about raising capital every day. So I want to master raising capital, and I'm no master yet. I've raised a little bit, but I love having guests on the show that can add value. And you purchased $90 million in real estate assets across multiple asset classes: industrial, retail. You've probably done some hotels, some mobile homes, some multifamily. I would love to find out about your story. So take us back to when you were in college and how you got into real estate and what made real estate attractive to you.
Sure. So, I feel like everyone's got to focus on their natural strengths. For me, something that was very natural was kind of looking left when everyone was going right. And this can be very advantageous as an investor. When 2008 happened, I was very insulated from that turmoil because I was in college at the time. So my day to day was like, eating ramen noodles and watching The Wire. I wasn't really too concerned with the financial aspect of the world. But when that happened, it was like, okay, I have heard people that I respect say investment blood is in the streets. And that was just a very clear example of that scenario. So when 2008 happened, I went all in on education. I started reading Warren Buffett. I started reading Charlie Munger, trying to learn as much about valuating stocks, learning about technical analysis, trying to find what strategy appealed most to me. So I invested in a couple of companies, in one of the most favorable times to invest in companies in America, and started to see success, like most people did that started in 2008, by the way. But it wasn't really until 2010 that something happened that was really my defining moment in my real estate career, which was that the European debt crisis happened. And basically every single day, there was a massive amount of turmoil in European markets because they were going through something very similar to what the United States went through in 2008. Banks were being frozen. There was government bailouts. And all of a sudden on CNBC, all anyone was talking about was the Greece bond yields. And they were saying if the Greece bond yields remained below 7%, the S&P 500 was going to be fine. But if the Greece bond yields went above 7%, the S&P 500 was going to collapse. And we were literally watching CNBC every day, waking up early, market timing in California. So 6 a.m, looking at the television, watching the Greece bond yields as if this was going to be the most important factor of my entire financial well-being. And guess what? It was, because if someone on CNBC is saying it, that impacts the market. And I just remember thinking, how is this the case that after all these books I read by some of the best investors in the world, thousands of hours spent, that something like the Greece bond yields, which is completely unmitigatable, unpredictable, have no control over it, is going to play a significant role in my financial well-being. And so I took that as a learning moment to see how can I find predictable returns in an investment vehicle, which is simple enough so that a small company can conduct accurate due diligence. And I was open for anything. And I slowly started to realize that real estate was by far the best vehicle to achieve those goals. And that's, where my story really started.
When you were looking at real estate, were you looking at all classes when you first started, or did you pick one and then master it and then move on to others?
So I was very fortunate in terms of 2 things, right? The first one was the timing. Okay. Now, some people can say that was just luck. If you were investing in real estate and you're listening at home and you were started to invest in 2010, luck certainly played a role in how old I was, but I can tell you when all your friends and family think you're completely insane, it's it's a little bit harder to do now, right? Like hindsight's 2020. If you looked at the graph of the valuations at the time, it was terrifying. But what was more fortunate was that when I moved to California, the market had been so decimated that a lot of the really bad ideas of investing strategies were really filtered out. And when I started to build my career and build my network, I was very fortunate to meet some very influential, very sophisticated, very savvy individuals who had created strategies that allowed them to overcome that massive challenge. And so my first investments were in syndications. I made some hard money loans originally, but was very early on exposed to the concept of pulling investors together to buy 15, 20, $50 million properties. And I skipped a lot of what most people go through when they enter the world of real estate.
In regards to syndication, I think for my audience, I think a lot of people are interested in multifamily syndication, but we don't really talk a lot about the other things that you can syndicate. So you can syndicate casinos, you can syndicate hotels, you can syndicate mobile home parks, you can do multi-property syndications. Tell us about some of the other things that you've seen in regards to, or some of the differences when you syndicate maybe a new development or something that's not multifamily syndication.
Yeah. So, I mean, I do have a pretty wide spectrum of asset classes that I've invested in. Just to clarify, I have not ever invested in a development. I've also not invested in a hotel. And both of the reasons for that is that they're too far away from my risk profile. When I started looking at the sector, I took about 6 months. I do have a background in studying economics in college. I basically took some of that economic data and tried to come up with an investment thesis that made sense with my worldview of the economy. And something that became very pronounced was that all types of real estate do very well when the economy's booming and the capital markets are loose. But only some types of real estate do well when the economy is struggling and contracting. And if you can find real estate assets that have an inverse correlation with the overall economy, you get the best of both worlds. So a most pronounced example is probably mobile home parks. The worse the economy does, the more demand there is for the product. Now, that doesn't paint the whole picture. That doesn't mean that every mobile home park is going to be a successful investment, but it certainly creates a tailwind that's very favorable. And of course, probably a lot of listeners are familiar with the fact that they don't build new mobile home parks. It's basically something that hasn't really been built since the 70s. So you have this really interesting combination of the recession resistance, the stagnation or the actual decrease of supply, and the fact that many, many baby boomers are retiring every single day. Most of them have very little savings. So all this demographic tailwinds, all this supply demand contraction and favorable ratio creates an interesting profile. And so I was very drawn to the mobile home park business early on. I was very drawn to the self-storage business, similar component there. People are more inclined to move. People are more inclined to downsize. People are more inclined to have their kids move home from college unexpectedly. All of those things drive demand for self-storage. So those were the two asset classes that I really focused on. And I've focused on mostly recession-resistant asset classes ever since, just because, again, if I can give up just a little bit of upside in exchange for a really significant amount of downside protection, I find that very compelling on a risk-adjusted basis.
I'm curious, actually, I'm thinking back to when the crash happened, and that's actually when I started investing. I met this guy at one of the meetups that I was running, and he came from San Diego having lost millions of dollars in spec homes. But he knew exactly the opportunity that was happening right before us. And he started buying a bunch of fourplexes, 12plexes. And my question to you is this: are the people that are in society typically saw the crisis, the crash as, doom and gloom, but a lot of real estate investors did not see it that way. They said, this is the opportunity of a lifetime. There's going to be one of the biggest exchanges of wealth that's ever happened in humanity right now, or at least in the United States. Were the people that you were hanging out of this mindset too?
Yes, but there was a little bit of trepidation with that. So, for example, I think that if I had been a little bit more aggressive, I would have probably invested in more volatile markets. I would have invested in more markets that were growth oriented, but I was just trying to take risk off the table. So I focused really on cash flow. So for example, if I had more investments in Los Angeles, for example, the ROI or the IRRs would likely have been higher. If I had gone all in on Austin, Texas, the IRRs would have been higher. But what I liked to do at the time, especially, was I wanted to find, is there a market that hasn't really experienced a lot of corrections over the last 30 years? If so, I'll invest there and just play the cash flow game, because the cap rates had gone up so much that it became very advantageous to do so. So example of that is like Memphis, Tennessee, where there's just not that much volatility. Now, the challenge with that is, yes, you can get back then that 8, 9, 10% year one cash flow, which is just amazing. I would do that all day if I could find that today. Or you're just giving up a little bit of upside potential that markets like Denver, for example, experienced. But my goal at the time was just to be as risk averse as possible, in part due to the fact that I was just starting my career. And I'm happy with the way things played out. But the most direct answer to your question was, I remember going to some meetings and a lot of people thought there was going to be a double dip recession. So where do you not want to be if that takes place? California, Nevada, Florida, all markets that ended up doing quite well.
Yeah, what we saw, I should say I didn't have the foresight. I was just kind of riding the coattails of my mentor, who was pretty small, but like still taking down a lot of units. He definitely convinced me that we were not having a double dip and that Phoenix, where we invested, was just going to skyrocket. And he was right.
Great example, but couldn't have been more correct.
Anyways, so you are a fellow podcaster. You have a show called the Cash Flow Connections Real Estate Podcast. Tell us a little bit about the type of guests, what kind of conversations you have on there.
Sure. So, I'll kind of start with this. I'm a huge proponent of the podcast medium. If you're contemplating raising capital, if you're contemplating becoming an influencer, there's no better medium than the podcast medium for a lot of reasons. The number one is that it's the most intimate. You are literally plugged into someone's ears, and it allows them to do things at the same time. So take a run, go for a long drive. You can also play with the cadence at which you speak. So if someone really wants to listen to you at 2.5x and they can get a lot of information in a quick amount of time, they can do all that, right? It's like the most control. They choose their own destiny. And I know that there's been a lot of popularity of the podcast medium. I saw some data recently that in 2014, iTunes had a total of 7 billion downloads, which is incredible. But that number went from 7 billion in 2014 to 50 billion in 2018. Now, as investors, we may see that and go, there's a bubble in the podcast community. But what you have to understand is that bubbles take place when things are not favorable on a risk-adjusted basis, meaning that doesn't make sense anymore to continue the action based on what the downside is. But the downside of a podcast is very, very limited. It's just you and I having this conversation right now. I've got a $300 microphone, and that's pretty much it. There's not a room of people in the back telling me what to say. And it's just not that, there's really no risk. So to answer your question directly, if you're contemplating doing this, it's a great way to do it. In terms of our particular niche, because of the popularity of the podcast, we have decided to focus on really sophisticated conversations. So the Cash Flow Connections Real Estate Podcast shouldn't be your first real estate podcast to listen to. If you jump into episode 199 or whatever, you're going to hear some words that you're not familiar with. You're going to hear some concepts that we assume and just jump right into the details. Mm-hmm. However, if you listen to 10 episodes and you get through it, you're going to know more about real estate than most anyone that you know, which is awesome. So the guests that we've had, IMF consultants, authors of various books, Grant Cardone has been there, Orrin Claff has been there, Robert Murphy, just some all-stars, and very fortunate to do that. And I think that you have to pick your particular space. Like, for example, your podcast is about capital raising. People know that you're the capital raising guy. They know where to go to get that. And I think that, that's going to help you a lot. If anyone's listening to this and is contemplating building a brand, focus on an angle and go all in that angle. You can always pivot that angle, but be sure to have that angle so that whenever anyone says a particular phrase, they think of you.
Yeah, if I never get anything other than just interviewing people that have successful tips for raising capital, then that's enough for me. And I'm hoping that, I think people see that the value of the guests, they're really the ones that provide all of the educational information. Because I myself, and I haven't seen a lot of podcasts like this, I'm learning while I'm doing this podcast, so my intention is to learn from having this podcast. And I'm not sure that a lot of people are setting up their podcast that way. They're trying to provide value, and that's awesome. But the way that I'm doing it is specifically to learn. And I think people get that energy from me, and they're like, oh, well, he's learning, so I should be learning this too, right? So totally. It's really cool. But I'm going to take a second here to promote your podcast and to let people know to give you a 5-star rating. One of the things that I haven't been good at is asking for a 5-star rating from my show. But if you're listening, please go ahead and do that to give us more traction, give us more strength, get us better podcast guests, et cetera, et cetera. But with that, let's continue on this topic of podcasting. Why did you start the podcast? Was it just for the same reason, because you wanted to create an authority platform, just like Joe Fairless says? Was there things that you wanted to get? Was it the connections? What have you experienced through the process? Elaborate more on that.
Yeah, it's a great question. No, it was not. I actually didn't know who Joe Fairless was when I started the podcast. I wasn't really tapped into this community. The community that I built was around word of mouth and investments that I had made personally, and then also investments that we had made as we started to pool investors together. So I wasn't really tapped into the online space. I basically had built up a very robust background and network of very high caliber real estate professionals. And it was as simple as saying, all I have to do is call them and record the calls. And I knew that it was going to add a lot of value. If you go back and listen to episode 1, for example, most people, and this is going to be the case all the time, your first episode would probably be your worst.
Yeah.
If you go back and listen to our first episode, you're going to get a lot of value out of it. It's probably one of the most dense, robust, and comprehensive episodes we've ever done. It's called Conducting Due Diligence for Passive Investors. And the guest is Jeremy Roll, who's a very influential person in my career. And, it just took off like that. And that was why we had the success that we did, just because we had already created those relationships.
Very cool. Let's go into the book. So as I mentioned earlier, I think I mentioned earlier that I'm part of a mastermind that's reading this. I need to come out and see you and get you to autograph this. That would be
I'd love
amazing. To. This is a phenomenal book, although I'm still in the beginning, and I've heard, hey, Ruben, you got to finish it because at the end, something amazing happens. And I want to ask you about it, but I don't want any spoilers, but I still want to go ahead and ask you anyways. Tell me about, so you go through a story where you are attempting your first capital raise for the mobile home park, and you discuss how even though it may be a great asset class, you do a comparison to, I think, like a cow farm, and maybe not everybody wants to invest in a cow farm no matter what the returns are, because they just don't resonate with that. Tell us about that first attempt and what you learned from it.
Yeah. And I appreciate that. And I like that. If something amazing happened at any point in the book, I'm happy. You know what I mean? So basically, I had started investing from my own personal portfolio. And then I started helping my friends and family, like my closest friends and family, invest as well. And so after I started to realize that everything was working, the projections were being exceeded, and the overall investment thesis made sense. Not to mention the fact that the concept of passive investing also worked, because this was kind of a question mark when I started my career. It wasn't nearly as popular as it is today. So we had established a track record. I gained some credibility, and I had a lot of confidence in the product, which was these investment vehicles. So I decided to throw a luncheon, and I had a luncheon of 30 people. All had to be accredited to attend. So a minimum of $30 million in the room. And I had created a joint venture with an operating partner saying that we would invest at least $500,000, and they had plenty of flexibility. So I could have invested $2 million if I raised the $2 million, basically. So I had this luncheon. I gave a presentation. You guys are listening to me now. I have the ability to communicate effectively. Like, communication is not a challenge of mine. I was able to go through my presentation. I thought I nailed it. And at the end of the day, I raised a grand total of $0. Nothing. Now, earlier I mentioned strengths and weaknesses. Like, one of my strengths is being able to go left when everyone's looking right. Great. One of my weaknesses is I expected that to go very well. And I was not emotionally prepared for that. Like, I was heartbroken. I mean, I can talk about it now, but like, there was a time at which there was a 6-month period where I didn't even know what I was doing with my life. And that was painful. And so if you're in that position right now, or if you haven't yet gone through one of those, just know, keep going. This is an incredible industry. There's amazing people in it that are willing to help you, but just know that everyone goes through something like that, where you look in the mirror and go, this isn't going to work. And it's important to have those moments, because you start to get in the habit of overcoming those. But the realization that I had after taking some time, that 6 months, to contemplate what I should do, I realized that I was trying to convince people that had had success throughout their lives, accredited investors that had never really contemplated investing in real estate, to not only invest in real estate for the first time, but to do so with someone who at the time probably wasn't investing nearly as much as them, and in mobile home parks of all places. Like, that does not sound appealing to someone that's not in the industry already. I was trying to convert them in a pseudo-religious way. Give me your $50,000 or $100,000 in a 35-minute presentation. And the comparison I made, which you alluded to, is just, if someone came to me today and said, I got a great connection with dairy cows. We've got an incredible discount on the dairy cows. They produce way more milk than normal dairy cows, and you can get them at a 20% discount. And it's like, that's not going to appeal to me. No matter what the price is, no matter what the return is, I'm not in the business of doing this. So I'm going to move on with my life. And that's exactly what those 30 investors did. So the point of the book is to say, it's not about doing what most people think. It's not about going out, finding someone, converting them to a real estate investor, then going out, finding someone, converting them to a real estate investor. It's about creating an infrastructure so that people are attracted to the top of the funnel, and you can educate them and nurture those leads through educational content, through phone calls, through answering their questions, and close. And you can do this in a scalable manner that includes a lot of technological solutions, podcasts, articles, and I go through a lot of ways to draft those things and create those things. But generally, stop thinking about going around chasing people. You should be the one that is chased. And just to put some numbers on that, I couldn't raise $500,000 in months. And a couple of days ago, we put out a deal. We were trying to raise 2.1 million. We raised 4 in 3 days. And there was at least another 2 million sitting on the sidelines waiting for a webinar presentation, which hadn't even happened yet. So like, wow, if you put in the work, you can be in that position very, very quickly.
Yeah. Tell me if this resonates with you. I'll tell you my story about how, so I got involved with a company called Bakerson, who started flipping houses and then moved into wholesaling houses and then started wholesaling apartment complexes, and then started syndicating and doing one-person syndications and fund syndications to take down apartment complexes. But since they came from a background of not having to report to the investor, because their report would be like, hey, we got a house, we sold it in a month, here's your capital back, and here's your return. And as we evolved into syndicating apartments, that infrastructure that you're discussing, where you communicate the returns, that was not established. So they brought me on board to help establish that, to help create an educational platform so we can get that information out to people and create this funnel, like you say. And one of the problems that we had was we would find the deal and then try to raise the capital for it. And since I started this show, I keep on getting this, massive amount of people telling me that's not the way you do it, Ruben. Really what you want to do is you want to first tell people who you are, get them to know, like, and trust you, then get them to understand why multifamily. Why do you like the specific asset class that you do? And then from there, explain how your returns work. And once you have had those conversations with investors, then you present the deal, this is like mind blowing to us, right? So we're trying to establish all that and create some infrastructure. Have you seen this? A lot of people that are learning how to raise capital go through this process and understand all of a sudden, hey, maybe we're doing it incorrectly. What are some of the lessons you've learned along the way?
I've got the book right now. I'm going to read just 2 sentences on the back cover. Unfortunately, the pervasive myth that's perpetuated throughout the real estate sector is that if you have a great deal, the money will just show up. Nothing can be further from the truth. And the reason that is a myth is that anyone that's been in this business knows that it's not who you know. It's who knows you. It doesn't matter if you know a lot of people. It matters who is willing to write that $50,000 check, regardless of the profile of the deal. And it's on you to determine whether or not the deal is appropriate. That's the situation that you have to be in. So yes, that's exactly what I did, right? I thought, this is an incredible deal. It's got an incredible track record. I myself have invested and succeeded for years. All I got to do is put this in front of the right people. Well, definitely these were not the right people. They were not primed for this content. So it's about creating the content that is attracting those individuals. And then once they're in, they may be curious. And the goal is to make it feel like you are similar to them, but you've just spent a couple of years thinking about it in more detail than they have, right? If you said you met a mentor at some point in your career, so did I. That's what that feeling is like. You go, man, if I had just spent the last 10 years focusing on this, I think I'd be saying the same thing this person is saying, because we have a similar gut feel perspective. That's what it means to be a mentor. That's what it means to be an online influencer, or someone that creates content that's valuable. And by the way, it won't be valuable to everyone. Not everyone likes our podcast. I'm very concerned with and talk a lot about economics. That's not, everyone's not super interested in that. But for the people that are, I'm one of the few places that you can get that. And so our listeners are very thankful for that.
Yeah, true story. Tell me about what you've learned along the way for raising capital. The show's all about raising capital, and I think you have some insight since you wrote a book about the subject. Tell me what else you learned. What lessons can somebody take away from this show?
I'll give some big picture and then we'll talk about some details. From a big picture standpoint, you need to build systems around the fact that this is something that you're going to do at a very large level. This is the reason that real estate's so compelling, is that it's highly scalable. I know several individuals who have raised $100 million and purchased $500 million worth of real estate. And I'm talking about people, not like massive firms that have 25 employees, like individuals. Now, the way that they've been able to do that is that everything that they do is done with scalability in mind. Meaning that if you're going to do something 100 times, there needs to be a system, a process, and it needs to be clearly identified. And so in such a way that you can state it and that anyone that's involved in the process can also state it back to you so that it feels like it's a natural workflow. I'll give you a great example, and I'll segue this to the content creation. So if I'm going to create content, articles, for example, I don't think of an article topic and then write an article topic. That's not like you're working on a conveyor belt, which if you are trying to do things at a massive scale, you need to think about moving like a conveyor belt. So what I do instead, I'll block out an hour and a half to 2 hours and I'll write down 100 topics. These are just random things that come into my mind. What's the difference between active investing and passive investing? What's the correlation between interest rates and housing prices? What's a better investment vehicle, mobile home parks or multifamily? Just those are 3 that I just came up with. So if you want to come up with 97 more, you're well on your way to creating 100. And the fact is, anything that I can do to overcome procrastination, I'm going to implement. So coming up with 100 is easy because I know most of them will be garbage. But then once I have 100, I'll pick the best 10 and write 10 articles. And I'll do it all in quick succession. So I may write every single Tuesday and Thursday for 3 weeks, and I'll have 10 new articles. So just doing things like that. You know, if you're going to have phone calls, come up with the way to schedule the call that's automated. If you're going to be emailing the same thing over and over again, create a template so you can hot command and paste that template. Those things make a huge difference. And you're going to see your business grow from a growth rate of 4 or 5% to 50%, to 100%, to 300% on an annual basis. Is exactly what most of the major players in the sector are doing right now.
I love that idea. And another thing I found is just by me, announcing and being visible as a real estate professional, I've had a few people reach out to me and say, hey, do you need somebody to write articles for you? I can do that for you. And, I've had a few people that want to help with social media or search engine optimization. And if the audience is intimidated by that, or they don't want to spend time writing blogs, there's a lot of ways to outsource that very cost effectively. So I just wanted to throw that out there, that's my personal experience, that I found a lot of people. And I think as I continue to scale, I'm going to do more and more of that. Like even on this show, since it's kind of new, as we begin to scale, I'm going to start outsourcing a lot of the video editing, a lot of the things that are not the highest and best use of my time. And I think that's also another important aspect of scalability is finding the things that you are strongest at and focusing on those things, and outsourcing the things that you're not. I think you even talk about that a little bit in chapter 4.
That's right.
So tell us a little bit about the Intelligent Investors Real Estate Conference. This is coming up in just a few days. What are you going to be talking about? How many times have you done this? I've noticed that a lot of the speakers and people that go to this are not the same people that I've run into at other events.
Yes, that's right. And similar with the brand of the Cashflow Connections brand, you mentioned Joe Fairless, who I have a lot of respect for. And actually one of his one of his partners is going to be speaking at the event, but that was not the scene that I was originally introduced to. And so the foundation of a lot of the speakers and the content and the caliber of the speakers is from people that we drag out of their real estate world into come speak at a conference. And it's not that they're going to speak at 12 in a year. It's that they're going to speak at 1 because we're strategic partners of theirs. But basically it's like this. There is so much free content on the internet, right? You can Google amazing, dense MBA level caliber stuff and learn for free, which is incredible. And so I take that very seriously. So what I'm saying is if someone's going to be flying into LA, which we have people flying in, not only from all over the country, but from other countries as well, I want the caliber of the content to be exceptional. However, the content is truly half of what we want to deliver. It's the experience, and most importantly, it's the relationships that be fostered. So we have investors that are currently investors of ours that will fly in. They want to meet me for the first time. They want to meet some of our strategic partners that we've invested with. And we know this, and we create the schedule to allow for this. So there's very dense panels where there'll probably be 3 people speaking, and you get a lot of different variety of different perspectives. And then there'll be a 15-minute networking break. And like I mentioned, half of what the key takeaways are going to take place during those intermittent 15-minute breaks, because that's where those real relationships can be fostered. And that's where people look back on the memory that they had. It's going to be about those relationships and those types of things. And so we take it very seriously.
Yeah, I'm actually really focused on doing the circuit. So in the last half of 2019, I went to like 6 different cities and conferences and met some amazing people. One of the things that I recommend actually for people that are listening that go to conferences is like get your camera out and take a selfie with these amazing people, because then like people get to see who your circle of influence is. And when you're, on Facebook with Hunter Thompson next to you, people are like, wow, I need to find out more about this guy, Ruben. So I love taking selfies with like really important people, with people that, and then as I have them on my show, then I have proof that like I actually hung out with them, not just on the show, but in real life. So I don't know. I think selfies
Totally
is a
agree.
great thing. People totally forget about that concept. Okay. So tell us, what is the cost? How can people find out how to go to this conference?
No, I really appreciate it. It's called the Intelligent Investors Real Estate Conference. You can check it out at intelligentinvestors2020.com. And we have some amazing people speaking. I mean, one of the panels we have is called the 5,000 unit or more panel, and 3 speakers, each of whom have at least 5,000 units. I think cumulatively they have about $2.8 billion of commercial real estate, and they're all under 40. It's remarkable. All of them have done this in less than 10 years. And there's so many lessons to be learned, because when you really start to scale, anything that's not working breaks. And so the lessons that are learned at that elite level can also be applied to people that are solopreneurs, because it's like, this is where you're headed. And if you want to get here, you need to implement these strategies and remove these problems. And I just learned a lot from those people. You mentioned you like to learn. I'm moderating that panel. There's a reason for that. I want to ask questions so I can help my own business, but also for the attendees' sake as well.
That's phenomenal. And what are the dates for this event?
January 25th through 26th in LA, downtown Los Angeles. And so I believe Sunday. If you go, like I said, intelligentinvestors2020.com, you can get tickets.
All right. So we have this segment that we've been introducing. It's called the lightning round. I got it from Ellie Perlman. I heard her do it, and I've actually seen or listened to your own answering of the lightning round on her show. But Let's go ahead and do it for the purpose of this show. And I'll start, try and keep your answers to less than 10 seconds or as short as possible. Or as fast as you can.
No, I'll do 10 seconds, but just knowing me, that's probably impossible, but I'll do it for the show.
Okay. So what is your favorite book?
I'm going to go with Miracle Mornings for Entrepreneurs.
Awesome.
And just to clarify, for entrepreneurs, not just Miracle Mornings for entrepreneurs. Check it out.
Very cool. What's your favorite game?
I'm going to go Red Dead Redemption. It's been a while. That's the first thing that came to mind.
Very cool. And then what's your favorite culture?
Culture. Geez, I'm going to say Western.
Okay. And if you had to choose one travel destination that's above and beyond, whether you've been there or not, and it's on your radar. Tell me, what would that be?
All right, no story, but I'll keep it short.
Uh-huh.
I went to Santorini. It's the most romantic place in the entire world. I went there with my sister because she was doing a Europe trip. So I went to the most romantic place in the world with my sister. People are getting proposed next to us. I'm like, I got to come back here with someone that I love. All right, anyway, thanks.
Amazing. All right, and then who is your best friend?
My wife, Chrissy.
Awesome. And then, so maybe you would take her to Santorini.
I'm hoping that happens.
Okay, and your favorite food?
Rice. Don't say it's not a food. That's the answer.
Okay, cool. All right, hey, there's no wrong answer. Whatever your favorite food is, it's cool. All right, thanks for elaborating on those, man. I have fun with that segment.
Yeah, good.
Okay, so tell me about the mindset that that a capital raiser needs to have. What are some of the things that needs to be going on in the mind of a capital raiser?
Yeah, so there's two things. The first thing is probably a lot of your listeners are familiar with the book 10X. It's a very powerful book written by Grant Cardone. You can have your particular opinions about him, but that book is very, very powerful. From my perspective, the reason it's so powerful is that it prepares people for things to go wrong. And so many businesses fail, not because they are out of capital, not because the investment or the thesis didn't work, but because they're not emotionally prepared for the roller coaster that is being an entrepreneur. And so if you can eliminate that, if you can contemplate that, if you can visualize that, which is something almost no one talks about, visualizing things going wrong, you actually overcoming them, you're going to be in a caliber of your own. As far as capital raising is concerned, all you need is a few dedicated investors. If you have a few hundred dedicated investors that are going to invest in every single one of your deals, and you only do 1 to 2 deals a year, you can have pretty much everything you want from a financial standpoint. And that is an exercise that not enough people do. And I do it in the book, and the numbers are pretty remarkable and shocking.
Now, there was a word that I heard you say in that last little part. You said envisioning. Do you believe in writing down your goals, putting down pictures on a vision board, auto-suggesting to yourself, driving these either images or thoughts deep emotionally into your subconscious? What are your thoughts on that? Does it actually help? Is it hocus pocus?
Yeah. So I'm a fan of pretty much all of that and do all of that. And the spectrum is from what people would consider like hooty tooty, which is like right where you want to be in 3 years, and familiarize yourself with that, because you can't get there unless you're familiar with it. That is kind of on the visualization thing, and it's hard to see how that applies to real life. But when you make it real, and when you get onto the super practical thing, is reverse engineering those things that you want to do, what you would need to do on an annual, quarterly, monthly, and weekly basis. And then all of a sudden, you have a clear game plan. And all of a sudden, we go from reading tarot cards to this is what we have to do today to accomplish what we need to accomplish. And so I can't see it because the camera can't see it right now, but one of the best things you can buy is a $25 whiteboard on Amazon. If you don't already own one, purchase it right now, and just every day or every week, write down the 3 things that you accomplish within that time period. And the reason I like to do this is that when you erase it and then rewrite it, because it will constantly change, because you rewrite it, it will constantly catch your eye and force you to focus on it. And if you can just do 1 to 3 things on a daily, weekly, monthly, quarterly, annual basis, you will be shocked at how quickly your business will scale, because most people are not doing that. And the likelihood is that previously to doing this, you were not doing anything close to what you should be focusing on.
Okay. So you mentioned something about reverse engineering. I've had a couple of people talk about that, but never really go into details. For somebody that's looking to purchase, for example, let's say a $10 million multifamily apartment complex in Phoenix. How would you reverse engineer how to take that down? I mean, you would probably want to have some skill set of underwriting to begin with, and maybe some other skill sets. How would you reverse engineer the purchase of that? Would you start to break down, this is how much we need to raise? Go into maybe some examples or some thought processes that you would have when reverse engineering such a deal.
Okay, so let's just start with the capital raising side, since it's the name of the business. So if I was going to raise $3 million. If I'm going to buy a property that's worth 10 million, I will probably require $3 million worth of equity. So what I would look at here, just to use the numbers as simple as possible, I would probably need, just again, let's use $100,000 investment amount. That's very high, but let's just say that's the case for the sake of what I'm about to do. So you're going to need 30 investors at $100,000 per investment to raise that $3 million. Okay. So what you need is, depending on your metrics, what I'm trying to do is reverse engineer what I'm going to need in order to get to that 30 investors. So I think that what I can say is, if I had 3,000 leads come in the top of the funnel, then maybe 10% of them would schedule a call and be interested in investing. So that's 300 people that are actually interested in. And then of that 300, probably 10 would invest. And that would be 30 investors times 100,000, which should give you that 3 million. So then the question becomes, of that 3,000 that I need to get, how quickly do I need to attract those investors? Do I have 3 months to attract those investors? So that's 1,000 a month. And then divide that by 30, that's how many you need to get a day. So what mechanisms do I need to get in place to do that? And that was just a very quick example of that. But you're basically trying to reverse engineer the steps that would be required for you to take. But here's what most people don't do. They don't have that number one. Number two, they don't track that number. So when you start to get to this level of detail and you know what you need to be doing on a daily basis, you can actually see whether or not you're succeeding or not. Because if you're able to get whatever that number is, 10 per day or something like that. Yeah, somewhere in that range. Yeah. So you can tell, okay, I'm underperforming. What do I need to do to increase that number? What do I need to do to continue to inflate it? And that's just one of those goals, right? Another example is creating articles. Like the simple example is, if you want to write 10 in a month, divide that number by 30, or how many ever work days you want to work. And you understand that you need to be able to write a certain number every single day. And if you only want to write on Tuesdays and Thursdays, you need to make an account for that. But the key is that is a key performance indicator. And you can tell whether or not your business is on track for that long-term goal, which at the beginning of this conversation about goal setting, it sounded like, oh, just envision where you want to be in 3 years. Well, what actually happens? Many of you guys have done this before. You envision where you want to be in 2020, which at the time sounds a long way away. Well, now it's 2020, and most of the things you thought about didn't get accomplished because there wasn't a very clear roadmap. And during the roadmap, there wasn't transparency in terms of how well you were doing. So this is a way to eliminate all that and to convert that stuff that you may read about in manifestation type of books into a real codified, legitimate way to scale your business.
Oh man, that is gold. I love that. Go ahead.
By the way, that's why I like the book Miracle Mornings for Entrepreneurs, because it's a perfect combination of those two things. It talks about visualization. It talks about writing in journals. And then the second half of the book is written by Cameron Herold, who is the COO of Got Junk. He's been a guest on my show twice or 3 times. You can Google his name in Cashflow Connections. He's just super operational. So it's not like he's meditating because he's like trying to be cool. He's meditating because he's trying to focus his energy on accomplishing the operational side of the business, which is like more along the lines of my personality. But by the way, I meditate every morning.
Really? So I have to find out, what do you do when you're in meditation? What is the process like? Are you just quiet? Are you listening? Are you praying from a place of gratitude? Are you visualizing the things that you want to attract as if you already have them? Tell me about the process, the exact process you go through.
It's really about slowing down and making sure that I start off my day on my terms. So for me, I use Headspace. It's 10-minute meditation. I come in here, I sit down, and I meditate for 10 minutes. Then I journal for about 8 minutes, 5 minutes, somewhere in that range. Then I do some sort of movement. So I've been training for a marathon recently. So I do some foam rolling, try to get my legs moving a little bit. And then I have a protein shake. And that's basically my morning routine. Now the journaling component is where those goal setting stuff comes in. But if you talk to me, and you've heard the beginning of this conversation, like a lot of people listening to this may be surprised to hear that I'm doing those types of things. But as investors, we're always looking for good ways to invest our time and money on a risk-adjusted basis. If you can commit to meditating for 30 days, the risk is so limited compared to what's potentially possible that you may come to in terms of realization during that 10 minutes. Like the upside is so massive and the downside is nothing.
I love it, man. I've really been delving into meditation and manifestation and, even some metaphysics at times, spirituality, and people get caught off guard. They're like, I can't believe I'm talking about this on a real estate show. But yeah, I mean, I think it's a really important piece for success in any business, not just real estate or whatnot. So I appreciate you diving into that, man. That was really cool.
It's necessary. What you don't want to do is be going at 180 miles an hour on the motorcycle, crash the motorcycle, get in bed, and then, oh my God, and then wake up in the morning, get on back on the motorcycle and go 180 miles an hour. Because during work, believe me, we're going 180 miles an hour. So that 10 minutes is really critical.
Yeah, man. True story. Tell the audience a little bit how to get a hold of you. What's your website? We didn't even bring up ASIM Capital. If you want to talk a little bit about that, feel free.
Too much fun. Hey, listen, I just wanted to add as much value as possible. The company, you can visit me at asymcapital.com. That's asymcapital.com. Like you mentioned, probably purchased about $90 million of commercial real estate in a variety of asset classes. If you enjoyed this interview and you want some free bonuses, I always give away free ebooks and interviews and things that people will enjoy. So just shoot me an email at hunter@asymcapital.com. Let me know that you enjoyed the interview, and I'll send you some of my favorite interviews that we've done on our show.
Man, congratulations. I understand that this has become a bestseller on Amazon, man. I'm super pumped up for that. I got this book, so I recommend people. I think, can they still get it for 99 cents on
we
Kindle?
did a sale. It was brief, so no, but I'll give you one better. I will give it to you for free if you pay for the shipping, if you get it from raisingcapitalforrealestate.com. So it's a total of $7.99. Believe me, there's a lot of ideas that are worth more than $8 in this book. So it's like my life's work. So yeah, check it out. If you're interested in the topic, which I know a lot of you listeners are, I'm really, really proud of it. I'm very competitive in terms of like the way that I conduct myself. And I know that this business has gotten popular. I wanted to write a book so that no one else could write a book on this topic. I wanted to just cover it from A to Z. And I think I did a good job. And if you read it, you'll know what I'm talking about.
Right on, man. Congratulations. That's really cool. Thanks for coming on the show, Hunter.
Thanks again. See ya.
All right, you bet. Take care.
Tell you what, the name of this podcast could not be better.